And there you have it. The markets are officially closed on this Wednesday, November 12th. Welcome, investors and traders. I'm AJ Monte, and I don't know where to begin. We've got a whole list of things to talk about. If it's Oracle collapsing, if it's the VIX getting ready to pop, how about gold and silver? How many of you silver stackers are out there? Let me see in the chat box. Put the thumbs up or whatever the reaction is that's making you very happy about owning silver. Now, before we get into the details and before we get into the charts, I want to bring on Nod from our Nod Live feed. He's got a whole bunch of news to broadcast here today. Nod, where do you want to start? The list is long. Go right ahead.
Yeah. The list is very long. Thanks so much, AJ. Thank you all for joining us again. We so appreciate you taking time out of your busy lives to join us. Listen, AJ, the Fed is still blinded by this lack of data, and we'll never know what's going to happen, but we're hoping to end soon. But the labor market to them matters most. And what's interesting is the unemployment rate for youths between 20 and 24-year-olds outside of the COVID area is the lowest. It's the highest it's been, which is 9.2% since 2016, which leads me to this. We've seen some weakness in the NASDAQ, AJ, as of late. It started off with Oracle, as you said, a few weeks ago when they got called out for overspending to get their CapEx badge. But other mega caps have followed. And just today, AJ, our friend, Mr. Michael Burry, who wrote The Big Short, he warns of earnings fraud from extended asset lives. Now, really quick, he accused major tech firms of inflating their profits by extending the useful life of the equipment that they're buying. So he says these hyperscalers with this NVIDIA-driven spending should shorten, not lengthen, their depreciation cycles, saying that $176 billion in understated depreciation is going to happen in 2 years. What that means is he says that Oracle and Meta may overstate their earnings between 21 and 27%, with more details from him coming on November 25th. So, AJ, let me pull up this chart of Microsoft. Just other than yesterday, they had an 8-day losing streak, which was the longest losing streak they've had in 14 years. So with everything I just said and with the softness that we've seen on the underbelly of the NASDAQ, AJ, what do you think about Microsoft, NVIDIA, and Oracle?
Well, not to glance over the earnings discussion there, but about 3 weeks ago, we had Zero Hedge publish the article that I wrote on more or less the manipulation that's taking place among analysts to lowball the earnings to make the companies look good. And Nod, you and I last month talked about the quote unquote Ponzi scheme that's going on with NVIDIA and some of the other revenue numbers that are being reported that I think are super overinflated.
Right.
Now, when we look at Microsoft here, for those who have been following along, let me just give you a little bit of a repeat lesson. At the very top of this chart, we could draw the letter A because that's starting the ABCD pattern. Now, as we go down, you could see we did not get a pivot until Monday, right here, this green candle on Monday. We had a higher low, higher lights, higher ho, higher ho, 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 ho. Christmas isn't here yet. We have a higher low, higher high. So we could put the B at the very low there. And today we have a hanging man. So if we get a pivot lower tomorrow or maybe into Friday, we'll be able to put the C there, which would ultimately drive that to a lower D in that ABCD pattern. So I don't have a downside target on the short term, but we do have a downside target on Microsoft. That was a 2-part target from back here in August, where we hit the upside target perfectly, and we missed that downside target by, I hate when that happens, but we missed that by pennies, and then it rebounds. So that's still an open target down there on Microsoft. So I'll keep that in place.
Right.
For those who are tracking Microsoft, the price targets here. And so if we get that ABCD pattern like I'm talking about, we could see Microsoft back down there at $4.90. So what are you talking, 21, almost $22 to the downside. So if you're a trader, understand this. If you're a trader and you're looking at the charts and you're managing risk, none of this conversation would upset you or should upset you. It could bring a little bit of stress onto those who are holding Microsoft on the buy and hold side of that equation. And if that's where you are, let me show you something here. Here's a monthly chart of Microsoft, and this is the second widest divergence we've had from that 20-month moving average. And this month, we still have half this month to go, but we have a bearish engulfing candle for November here with a hanging man on top of that to boot. So that's more bearish. So my little bitty target at 490 is right there. Is that possible? I think so. In fact, not only do I think it's possible, I think it's probable that we'll go lower and hit that 490 target. Yeah, but you mentioned Oracle, and remember that news. You and I were chatting before we started the broadcast here, because I don't recall what the exact number is that NVIDIA put into Oracle, but that was the gap
Right.
occurred on that
On the
news
news.
that they were pumping the billions of dollars into Oracle. And look at that. We are now down below that beginning of the gap. We're down below that. So all of the folks now, and all is a pretty big word when you talk about the markets, of course, but you have to understand that everyone and anyone who bought after July and it's still holding that, all of those people and all the volume accumulated in that period of time, all of those people are now losing dollars. I'm going to put a negative dollar sign there. So that's what's called overhead resistance. That's when the buyers and the investors of that particular stock who are now losing money, they are looking to get out at a break even. So they become the stock's worst enemy at that point.
Right.
So I think I have one downside target on Oracle that's still open down there around the 200 level. That's another one that's most likely going to happen when we see Microsoft heading lower as well. Yeah.
Well, your mega cap targets are hitting, and we'll hear more about that tonight at 6 p.m. on Rapid Fire. I'm sure they're all going to get asked. But listen, it's all of a sudden we've got a cold snap. Even here in Florida, I wimped out and turned my heat on, AJ. But traditionally, that leads to a rise in natural gas. So I've got a chart of natural gas here, AJ. With this seasonal move that we've seen. And what's interesting to me is that crude oil had a big fat red candle to the downside today, but crude oil with natural gas is on a tear. It's at its highest level since 2022, which is a big deal. So we have a lot of people in our community that have traded UNG. What are some opportunities you see in natural gas, if any? And then can you please talk about that fat red candle in crude oil?
Well, let's look at natural gas first. This is the futures chart. This is the weekly 10-year chart. And that's ticker symbol /NG.
Right.
Then we'll get to UNG and the gas in a minute. But if you look at this, and this is pretty amazing, this is a major role reversal going back to October of 2023. Check this out. I'm going to try to draw a straight line right across. Oh, that's not so bad. I didn't have coffee today. I've been drinking that ginger tea all day long. So this former support right there, again, going back to October of that year in 2023, that is broken here on those big red candles. So the support is broken. It held as resistance here. And I believe it's going to hold once again as resistance. So natural gas, it's a misconception. People believe that to trade natural gas, you have to be in tune with the Weather Channel. Well, let's face it, it's cold down here in Cedar Key as well, but we don't heat our homes here with natural gas. And so we don't really care about the price of natural gas, but the folks that do, and those who heat their homes with oil burners up there right in New York, especially Long Island, they're more concerned about the prices here as that being an inflationary I guess you could say a point that they're going to keep an eye on. But you got that resistance right at that high. And I believe, looking at the CCI, because that's one of my favorite indicators, looking at that CCI, I'm thinking that we're going to see a pullback in natural gas. Now, that brings us to UNG, because that's one of the best ways to trade natural gas. It's going to be almost the exact image of what we saw here, except this is a shorter term chart, right? This is a daily chart. And if you go back and connect all those lows and project out to the right, that too is a role reversal where it was held as support here, briefly held as support, broke here. That's where support broke. And now that's resistance. And down below, you can see again, the CCI is pivoting lower. We have a drop in volume after today's trading session, which is taken as a negative. When there's a drop in volume on the way up, that means the buyers are losing momentum. So let me throw this one out there for someone who might be interested in an option trade. Again, I'll tell you how I would trade this. Ready? So I'm going to go out there. Now, I like to buy options that are going to give me enough time to be right and the flexibility to be wrong and me being able to fix that. I would go out to January, maybe even February if they had them, but they don't. But after November comes off February. But let's go out to January. And you look here, the January $13 puts are trading for around 85 cents, which is about $85 per option contract. That's how I would trade that one, because if you buy that for 85 and UNG drops by $1, just $1, which is $1.14, what are you talking? Maybe 12%, 11%, right? You look at that, and that option could, with a $1 drop in UNG, that option could be traded for around $1.30. So if you buy it for 85 cents and the stock drops by $1, you can sell that for $1.30. That's a very inexpensive way to trade the downside, especially in natural gas. And so the more I look at that, the more I want that to be a trade publication for our members. We'll have to see how that goes. We already have enough trade publications going out this week, but that's a very, very interesting chart right there. Now, if I look at OIH, going to the oil services, we had a big red candle today.
Right.
Big. Now, this was a two-parter. Again, for those who are joining us first time, I do a lot of these two-part forecasts, which I don't believe anyone else is going to give you a two-part forecast. No. And so the reason we do that is, again, to help the option traders with upside targets and downside targets. So if you're a swing trader, these two-part forecasts come in very handy. So we hit the upside target, no problem with that, which was 289. And now we're on our way down to that downside target of 274. So when you look at that big red candle and you look at the volume increasing on the way down, what does that tell you? Think about that for a second. Even if you know nothing about charts, what is an increase in volume on the sell side? It's telling us that the sellers are getting more excited. So if they're motivated, the buyers are going to back away. It's kind of like if you're putting your house up for sale, yeah, it's going to be a seller's market if everyone on the block has a sale sign up, right? Mm-hmm. You're not going to get your price. So the buyers tend to take their signs or shop. It's a buyer's market when all the sellers are motivated. And that's what we have here. The buyers are going to most likely move away in oil. Now, you can look at OIH. You can look at ExxonMobil. XOM is the ticker symbol for that. You see a big red candle. What's another? CVX for Chevron. Look at that big red candle on higher volume. And the list will go on and on. If you look at BP, here's another one. It's pivoting lower, and all the oscillators are going lower as well with sell signals. So looking at those charts, there's no way I'm going to take a long position in oil or energy. Not yet. I'm not saying I never will, but not right now, not the way the charts are telling us that.
And you would wait for a pivot off of today's red candle, right?
To buy it? Well, let me just throw this out there, being that you asked the question. We have the 7-point trading checklist coming out in an algorithm. So our members are going to have access to a page where they could just put in a ticker symbol, and it's going to show you all of the 7 points that I look at on a chart. Now, I can tell you right now, if you were to look at BP tomorrow or ExxonMobil or Chevron tomorrow on that algorithm, you put those ticker symbols in there, it's going to show you sell signals all the way down the line. So for me, the only way I would think about buying is if it starts reaching a support level, and then I start to see the buy signals start to come in. Then, even then, I would only scale into the position with maybe a 50% position and wait to see if we get a bounce or not. If we don't get the bounce, then I still have cash available to be able to buy more. That's actually, now I'm not a crypto expert. We'll talk a little bit about this later, but we have the best Cryptex team on the planet, and that's Matt and CJ. And so they've really gotten my attention with cryptocurrency, altcoins, and Bitcoin. Now, again, I'm not the expert in that space. They are, but the beautiful thing about the cryptocurrency market is that the signals, the buy and sell signals, are very accurate. And so I've been trading XRP, in and out of XRP. Yesterday, I sold some of the position. Why? Because the signals were turning just like what we're seeing here in the oil markets.
Right.
And so if you're interested and you want to have access to the trading checklist algorithm, you do not have to be a member from StickyTrades. That's a standalone that we are making available to the general public. So it's very inexpensive. It'll help you read the charts. It gives you lessons. Well, maybe next week, now we could talk about that on the next Wednesday
Yeah.
broadcast. We're already halfway through the show right
I
now.
know, I know. Well,
I
listen,
mean,
let's stay in the space. I mean, let's do a triple scoop. I mean, so we, like you said, we've got our great Cryptex team. They've launched, they've gone live. We're really excited about the amount of follow through we got. The interest is great. Check us out. Please grab a free trial. But AJ, you know, I'm showing a chart here that shows a what I believe is the death cross. Now, you and I have some different settings, but is this something that would give you concern if the position was yours and you were long trading Bitcoin? What is something like this? And then in the overall general context, can you talk to people about what the importance of the death cross is and if it impacts your trading or not?
okay, now first and foremost, you're looking at Bitcoin. I don't know what platform that is that you have, but it looks like you have exponential moving
Yes.
averages up there, which,
Yes.
by the way, if you know nothing about moving averages, the exponential moving averages, the way it's calculated, puts more weight into the most recent price history. So that's going to be a little bit more sensitive than what you're looking at on a simple moving average. Now, if I pull up my chart and look at Bitcoin, I have all my different moving averages here. Let me highlight that for you. The the um, the green line there, I don't know if you can see that. That's my 50 period moving average. Down below, I'll draw another line here. That's my 200 period moving average. So remember, the exponential moving averages are going to draw those moving averages more closely to one another. But my simple moving average still has a pretty wide degree of separation there. Now, I'm not seeing the cross yet. And even if we did, let me take a step back and show you something. There was a time in recent history, in fact, it was right here, when we had the moving averages crossing back here. You see that?
Mm-hmm.
And shortly thereafter, what happened? That 200 period moving average was acting as a major support level. And so I'm not saying that the game is over for Bitcoin, because I think it's far from that. But I do think that Bitcoin right now is searching for a support level. And I think with what they're talking about at the White House and what JD Vance is talking about with crypto, I think next year is going to be the year for crypto in 2026, particularly July 4th. I think they're going to make the big announcements. So I don't have a whole lot of confidence in our economy. Don't get me wrong. There's a lot of good things going on, but what Nod mentioned with the unemployment, especially in the early 20 folks, I think that's going to trickle down and domino, especially with AI eliminating a lot of the jobs that are out there. And what people are not talking about is the government layoffs that have been taking place while the shutdown was going on. Because remember that while Congress was, I'm not going to say on vacation, but while they were out of the office,
Right.
the sole responsibility of everything has to do with running the country fell on Trump and the White House. And so while they had the controls at that point, they were laying off a lot of government workers, which has not been reported yet. So keep an eye on that, because I think once the numbers do start to trickle in, I think it could jolt the system and the markets to another level lower. Now, I'm not talking about the collapse, not yet.
Right.
I haven't talked about that in a long time. I'm not talking about that yet. But what Michael Burry said with earnings, and Nod, you nailed it, that he's talking about earnings fraud. We talked about the games that are being played on revenue numbers and how they're just throwing money around from, like it's musical chairs. And they'll take money, throw it into a company, buy product, they show it as revenue, and then that company comes right back to the company that gave them the money in the first place and buys their product. And the money is more or less, you got the velocity of money falling within this group of 5 mega cap stocks. So they're not only painting the tape when it comes to earnings, but they're giving you false readings on revenue. And eventually that's going to come crashing down. Not you and I in the warm up to this, we were talking about the financial crisis, right? And so you have to understand that those who are managing your money, let's say you have a money manager right now that's in their maybe 20s, early 30s, you have to understand that they were in elementary school when the financial crisis hit. They don't have any memory of that. But the practices of what's going on, those who are practicing these derivative trades and the leverage trades that the insurance companies are playing right now, they are repeating the same mistakes that were made back in 2008. The only thing that has changed are the players on the field. And the players on the field have no clue as to what they're going to do when all the derivatives start firing off. When that happens, then we, Nod and I, and our Sticky Trade team, we will let you know when the crash begins. Everyone asks me, you still have your eyes on the 2020 lows? Yes, I do. I just don't talk about that all that much because the majority of our positions are still bullish. But when that thing breaks, holy mackerel, the floodgates are going to be let open, and there's going to be a lot of damage, especially to the buy and hold investors. One last thing, Nod, we have a VIP group that we talk to every Tuesday. Yesterday, we were talking to them, and I was showing them how to put on long-term put spreads that eventually are going to be paid for by the market as a protective measure that they could build an inventory of these negative delta or bearish put spreads to have in their back pocket and build up in their account so that when the market finally does break, not only will they be saving on any losing positions that they might be holding, they will be making money on the way down. That's what we're gearing up for. And so far, things are working out really well. We get a lot of premium coming in from the market, paying for other positions, and we call those cash cows. And I think we got 3 or 4 of them right now, and we're still working on getting 2 or so more cash cows on the books. And it's a great market for option traders for sure.
Well, speaking of cash cows, I'd be remiss if we didn't revisit gold and silver. AJ, since we last spoke, I mean, gold did pass $4,200 an ounce. The demand for gold has surged to 58%, driven by these ETFs that they've created. So that'll be something we could do a deep dive in later on. But that said, the government has done their work with the U.S. dollar. Gold and silver, despite markets being strong, has become a flight to safety. So imagine what happens when the market sneezes, where people are going to put their money into. So would you do a quick refresh on gold and silver? Because again, I hate to champion, but you won't do it yourself. You were crazy enough to talk about silver when it was at 25 going to 50. Well, look, at 50 seems like it's support now.
Well, yeah, I really want to focus more on the silver. Gold is good, but silver is the main headliner right now. And I want to show you something. We talked about this, I think it was 2 weeks ago, maybe a little bit further back when we were talking about the sell-off here in silver. I was talking about how the institutions were pushing it lower to shake out the nervous longs. What's a nervous long? That's someone who bought silver at 35, it's trading 50, and they're celebrating, that they got this big unrealized profit. But when the market starts going down, they start scratching their heads. They start asking questions of their neighbors and say, you think I should sell my silver? I got a massive profit in this. So they get nervous and they sell. And that's what this big down push was here. But the institutions came right in and scooped it all up. Look at the volume increase down here as silver is starting to go higher. Now, I'll make this prediction on this live recording right here on this Wednesday, November 12th. Ready? I think silver is going to bump its head against this high, maybe go a little bit higher just for the record to say, like Tom Lee, hey, we just hit a new record high. I think silver and the silver traders are going to push it up just a tad higher than what we saw back here in October. And then I think we're going to see a pullback to 50. 50 is a very big psychological number, but I think 50 is going to hold. And I think it's going to hold in a big way. When it pulls back to 50 and bounces off of 50, Nod, here's my forecast.
I'm ready.
I think we're going to be right on our way to $100 an ounce silver.
You heard it here first.
We're going to be, and I think I'm being conservative. I know there's some real pie in the sky forecasters that are saying, $200, $300, $1,000 an ounce silver. Yeah, that's a possibility, but I'm taking it one step at a time. Now, why do I think we're going to 100 pretty quickly? I got to back this down, because if you take the depth of this cup that has taken 45 years to form, the measured move is you take the depth of the cup and you attach it and extend it past the breakout point. And that's where it's bringing you to $95 to $100. Now, remember what I said. We got to get the pullback first to form another ABCD candle in here on the monthly. So I think we're going to see a little bit of a pullback to 50. And then I think we're going to zigzag our way right up to 100. So if you're still thinking about, am I too late for silver? I would say, hold on, be patient, sit on your hands, be patient, wait for that little pullback. But any kind of a pivot or a bounce off of that $50 new support level is going to put things on the launch pad. Now, if you compare that to gold, which is /GC, got to watch the time here. We got 3.5 minutes.
Right.
This has already gone through its cup and handle breakout. You see this? Here's the depth of the cup. Here's the breakout. And that's where we had the $3,000 an ounce gold that I had forecasted way back at the beginning of the year. But now gold is super overextended. And I think gold is more likely to pull back and have silver catch up to it, which in turn would get the gold silver ratio more back in line to what we saw, over the 40 to 50 year average for the gold silver ratio. So I think gold could pull back a little bit more in percentages than silver, but silver is going to remain strong. And bam, it's a cheaper metal. It's now on the critical minerals and metals list. The government's going to be buying it. Governments around the world and central banks are buying it. London's buying it. So, I mean, you got to go with the money, right? And I think we're in good shape here. So,
listen, we chewed through a ton of time. I'd be remiss. Let's get a couple tickers for some people that were kind enough to show up real quick. So for Alex, just can you do a quick crop dust on MSTR for Alex, please?
MSTR is right at a key support level. I do think we're going to get a bounce on that one, and I think we're going to get that bounce pretty soon. I'll go so far to put a forecast on this, if you don't mind, for Alex there. I'm going up to right around the 250 level. I'm going to make that exactly 250. And for those that have short put spreads on that one, I would just keep rolling those out and collecting credits as you roll out. I think 250 is a good target because that's going to bring it right to that moving average. All right, who else? We got one more ticket, so we got maybe enough time for two more tickets.
Yeah, let's squeeze them in. So for Daryl would love Disney, please.
Disney. All right. Disney is on an upswing here, but you got this major resistance up here for Disney. Now, you got to be careful because if the economy continues now, again, listen, I don't care if you're a Trump supporter or not. I don't believe Trump's words that inflation is coming down. I'm just telling you, my eyes are seeing something completely different. I still see inflation. I still see much higher inflation, especially with the Fed lowering rates. They opened up the door to higher inflation. Gold and silver are respecting that as well. But I think that as inflation continues to eat away at people's paychecks, I think Disney and some of the other entertainment stocks are going to start to pull back. So I have a resistance area on Disney up there around 120. So they only have about, $3.35 before we hit that resistance. And then I would be more shorting Disney on the way down with the rest of the market. Yeah, that's what I have for Disney.
All right, one more from our friend TT. Any thoughts on AMD? So to me, this seems the structure is very similar to 2021, and we're currently in a distribution formation, possible double top at end of November.
For TT, let me show you this, TT. Last week, I had to put a target on AMD at 264.50. 264.50. Check out today's high, 263.51. So we're 99 cents away from hitting that target. I think we'll do that tomorrow, and then I think it's going to come right back down to start filling some gaps to the downside. Nanad, we're right at the mark, And I got to do one big shout out for those who are crypto traders or think about crypto traders. Plug into Cryptex, plug into our 7-point trading checklist algorithm. If you're not a member, stay tuned to the Sticky Trade web channels that we have through YouTube, Facebook. We're doing live broadcasts coming through X. And stay tuned because we got a lot more coming down to teach you, and especially with reading the charts. Do not panic. Do not get excited. Turn off the television. Focus on the charts, and I think you'll be a lot better off. Nod, thank you so much for joining us today.
Thanks, AJ.
And co-hosting, and thank you, everyone. Thanks for the ticker symbols. Thanks for that chat room. That chat board is still rolling, Nod. We'll have to pick up on that next week where we left off here. Good night, folks. Have a good one.
See you in Rapid Fire.